The broadcast is now starting. All attendees are in listen-only mode.
Good evening. Can everybody see my screen and hear me? All right. Thank you, Deborah. Let's go ahead and get started. Looking at the S&P, again, the Beginner Circle webinar, the purpose is to help acclimate those new members, finding things on the site, answering some introductory questions about Elliott Wave, and doing all of that in a forum where we kind of look at some of the main things that we cover in the markets from a top-down approach to help everybody with their bearings. So on the S&P, because we extended deeper to that new low under the March or under the May low, I went ahead and shifted to the larger degree parentheses 3 and 4. So I backed up the minor degree to the August high, a small fourth wave for the minor degree 4, and then this fifth wave is just the minor degree fifth of wave 3. Now, that means that our third here only got to a 123.6% fib extension, which is more muted than is normally ideal. But the deeper retrace here, coming all the way to a 618 retrace of this entire third, really argues more that this is a intermediate fourth wave already, particularly because of the size being so much larger than any of these consolidations. Even though it is certainly larger than our intermediate degree wave 2, but we already knew that that was very, very small. Technically, as a minor degree wave 3, as a fourth, as this degree fourth, we did not overlap with the top of wave 1. We came very close so far. That is where the officially, as the smaller degree 4, and then getting the fifth of parentheses 3 and another 4, and then a fifth wave up, would be officially invalidated. It just seems much more probable, given all of the other charts that we see, that this is already just the larger degree wave 4, and that is even at its lower normal region of support. You know, we have a couple of different guidelines that we work off of for where we should see a fourth wave hold support. The first of those is either, is the Fibonacci retrace levels from the third, also looking at fourth waves of prior support. And then if you have a deeper correction coming back from the 1,236 to the 764, in this case, a little bit below the 0.618. So we still are within valid fib support, but now we really need to see this bottom solidify if we are going to have one more higher high over the 5,000 region, ideally closer to 5,560 still, would be the best fib confluence for that one more additional high. There is a greater risk now, though, that this topped all of the primary wave 5, but we still have this ABC correction into the recent low and should get a more significant bounce back up into this same resistance zone, at least into that region where we saw the breakdown in April of what should have held as a small fourth wave and getting a fifth wave up for this wave 1. Actually, it was wave 1 of the smaller degree inside the fifth of 3 at the time, but that failed to hold the fourth wave and then broke down further in April, failed to hold as a wave 2, and broke down into this bigger pattern. So now when we look at the structure that we want to see off of this low in order to confirm that bottom, if this is a larger parenthesis or primary degree wave 5 top, and this is an ABC down as an A wave, then we should get an ABC bounce into that resistance region, as we talked about, as a larger B wave. But really what we want to see is 5 waves up. 5 waves up into that resistance zone is going to fit very nicely as wave 1. We know that our parentheses wave 5 should be 5 waves up, and want to see 5 subwaves inside that wave 1. And inside of this wave 1, that's what we're working on right now. We would like to see 5 subwaves up off of that low and a corrective retrace to give us that first 5 up, 3 down, where we could then more confidently trade off of this as the low, which should fill out the rest of 5 up into wave 1. and then hold a corrective retrace as wave 2. But along the way, we're going to look for that confirmation at those smaller degrees. So I'm going to switch over to the ES chart so that we can zoom in on this structure here using the futures, which has most of the time has the same count, the same Elliott wave count as the market in general, but has more data from hours that it is open when the cash market is closed, and that sometimes fills in some missing parts of the picture when you don't have that data. So this is the zoom in, looking at a 1 hour chart on the ES S&P mini futures. So we have that same structure. I'll make this brighter here so you guys can see it. The same ideal 1, 2, 3, 4, 5 waves up is a proportionate subwave count inside what we want to see up towards the 4300s, 4250 to 4400 region for wave 1 of that parentheses wave 5. And so far off the low, it is possible to count this as 1, 2, 3, 4, 5 up, with this is overlapping fourth, so that would mean it's a leading diagonal. But what Garrett and I have been looking at is where this is an ABC up for wave 1, a wave 2, this is an A B wave consolidation, and we're going to get a C wave up in a third, and then a deeper fourth, and then a fifth wave up, and that would be a potential leading diagonal for as 5 up for this wave 1. And we like that a lot because it does fit nicely proportionately in terms of size for what we expect is the ideal wave 1. Whereas if this is 5 waves up here, then it implies that this is a wave 1 as a bigger impulse for this wave 1, and would push the whole thing up to being a little bit too large. So now we're going to zoom in just a little bit more to the 15-minute. And so then we can get an ideal look at this micro wave structure that we want to see. So some people might be able to count a small fourth wave in here, but we think that this looks better as an ABC up for that initial move off of the low from June 17th. And then a retrace that so far, or that held at the low this morning, as a 618 retrace, pretty much right on the nose there. Earlier this morning, I used this blue arrow. Sometimes I'll just draw a green dashed line for support and then a blue vector. And that implies what I call a pirate ninja, which is just a fancy way of talking about a measured move, where we didn't have the cleanest structure for 5 waves up or any kind of clear confirmation of what this move should be off the low as of this morning. And we had kind of a rough retrace, but it was down to a 618. Counts best as a little A, little B, and then a very stretched out C wave. But that holding the 3693 low gave us the potential for at least a measured move up. And then we were holding a little 5 up, 3 down, and then got this nice rest of the 5 wave up move, which because of the fibs where this hit, coming right to the 764, that implies the A wave of a leading diagonal based on the normal Fibonacci pinball that we often see in a diagonal. So we should hold tonight. We should hold this B wave retrace and maybe start heading up in the micro subwave path of this C wave here. So this is a C wave inside of the parentheses wave 3 there in blue, should be a 5 wave micro move. So that's micro 1, 2, 3, 4, and 5. Ernest, I'm not sure exactly what you mean as far as the 5-minute count. I think looking at a 15-minute here on the ES is as much detail as we have at the moment. But you also asked a question regarding ES versus SPX. When ES volume is very small, do you discount? If there's something that nominally breaks some support at a smaller degree inside a different move, sometimes you can kind of ignore that. I tend to include all of the data and look for the the late night data that we get from the ES to kind of fill in some of those missing subwaves when we get price gaps in either direction in the S&P cash. So this is pretty much as much zoomed in as I think we should look at the moment. Because we only have a 3-2 retrace here, might end up seeing this is just an A wave, and we get a micro B wave, and then a C wave down, maybe into tomorrow morning, and then turning up in the C wave, which ideally targets the 3870 to 3890 region for the third of what can be our first 5 up off the low at a significant degree. Switching gears just a little bit, let's take a look at the Nasdaq. The Nasdaq does a little bit more concerningly potentially count as all of the primary wave 5 off of the March 2020 low. Again, it has a different subwave count that was a more compressed 1-2, 1-2, 1-2 start. And so I do think you really kind of need to squeeze in a lot of the final subwaves in order to get all of this primary wave 5 topped. It is a deeper than ideal retrace, but I think just like the S&P, it should make an attempt at one more high, or at least get that decent B wave bounce. And in the Nasdaq, that can count already as the B wave in a more shallow cycle degree wave 4, because remember we've talked about that before, that we have an extra set of an extra degree of subwaves because the low in the Nasdaq was not 2000 and was not March of 2009 or even December, November 2008, but we actually have 5 waves up at before that off of the September 2002 low as a cycle degree wave 1 and wave 2. So that's the fourth that this would be, if this already is the fourth, but still ideally we're looking for one more high in that fifth wave, and there are certainly a number of charts that we look at regularly that support that. At the smaller degree, nope, that's not, this is the one. We can probably look at some similar leading diagonal potential to what we were just looking at in the S&P or in the ES, where this would be in the A and the B wave working inside of this blue 3 of wave 1. So in that, if we zoom out just a little bit, this is wave 1 of this wave 1 of the parentheses wave 5. I know we've looked at the equal weight versions of the index. Again, even more so on the RSP, I think this can still count as the minor degree, the smaller degree wave 4 inside the parentheses 3. So depending on how we're filling out into this 190 to 210 resistance region, if it looks like we're filling out 5 waves up into that, I'm going to probably go back to that as my primary count. Right now, I've made that green as an alt, where that's a little bit more bullish. And when I say more bullish, the target for this 3 is lower than the target for this 5. But I say that it's more bullish because it allows for yet another 4 and a 5 afterwards to prolong the overall bullish market. Whereas if we are in the parentheses wave 5, we get a bigger move now, but that's the last hurrah before this looks like just a little bitty pimple as part of a much larger decline from this target box. But the RSP only hit, even shy of the 1, 2, 3, 6 for the parentheses wave 3, which is normally, this is the zone where our minor degree wave 3 inside of the parentheses wave 3 were to top. So that would still be really, really nice if we got maybe a little smaller wave 1, and then a 2, and then 3, 4, 5 into here, and then could hold yet another 4, 5, and we can find some other stocks after we hold this 4 to that still argue for getting that parentheses 5 from here off into 2025 or even into 2026 before the bull market really, really ends. And I think the NYSE, oops, That's not the NYSE. The NYSE supports that as well. I went ahead and I added the larger degree, the yellow parentheses for here, but we're still holding in a normal support zone where it can be the 3-4 inside the intermediate degree wave 3 and get another 4-5 beyond that. And so maybe that's fueled by some of the larger Dow names or some other things that can potentially be a wave 1 and a wave 2, or still just the A and the B inside the 3 in some different variations of the count or different sectors that we're looking at in stock waves. So we'll certainly keep you guys appraised of that potential as we go. The other one that I wanted to look at, we can take a quick look at RTY. RTY, really am not crazy about still counting this as a fourth wave. It is very disproportionately large. Also think that it is kind of mistakenly overzealously bullish to call this a 1-2 of a larger ending diagonal, but that is certainly something that is possible, and there are some charts that can support it. But I think it is probably better to really just consider that this was a more significant top, and maybe we get some outperformance on a bounce and it does end up making a nominal higher high, but I would not heavily rely on small caps as a whole to do so, because that really is much deeper than ideal. Although it certainly does still count as valid as a fourth wave, especially if this is morphed into an ending diagonal, where this would be an ABC up to that final fifth. All right, if no other questions on that, I'm going to jump over and we can talk about oil and natural gas, and then we'll jump over and talk about the miners. All right, here's oil. Oil did not make a higher high yet over the March high, whereas a lot of the oil stocks did clearly complete actually what looks like a parentheses wave 3 of a larger pattern off of, I think I made a second count here. That's not it. That's definitely not it. All right, I thought I had added that to one of my tabs, but I guess not. So there is some concern that this was a truncated top, especially because we didn't hold a 618 for the B wave, instead dropping down closer to an 88.7%, which is not a very reliable fib. But it really does look incomplete without one more high. So I do think that natural gas topped, and we'll look at that in just a minute. And a lot of the oil sector stocks look like they topped in a parentheses wave 3, and that this is just the A of a bigger A wave is part of an A, B, C for parentheses wave 4. Andy, we usually cover XBI and the sector ETFs in the stock waves service, so we can cover that in the webinar tomorrow. So we'll just stick to those things that are covered generally in the markets section. So now we'll jump over and take a look at natural gas. Natural gas, we were looking for this ABC up as a fifth wave off of the 618 retrace in the larger diagonal. We got that, and then we held what could have been an alt fourth and got an ABC move up to a nominal higher high, and then got a little extension of that. But that really looked like we were very, very toppy at the time and have turned down pretty strongly since then. This can be 5 waves down as a leading diagonal off of the actual high that was made. So this can be setting up for a bounce, maybe to 8.25 to 8.5. But then I would expect at least a measured move from there down to probably down towards the 200-day moving average, right around 540s, might be coming up a little bit higher at the time, close to about 550 So if we can get a corrective bounce, that might even set up a short in natural gas. John, the oil equities have not clearly started a B wave bounce, but that's what they're due for. They're stretching a little bit more, so they look more like a sharp ABC drop as opposed to a possible 5 waves down. So that means that we could get a little bit of a nicer B wave bounce, but I wouldn't rely heavily on that. Most of them have clearly broken support. All right, next we'll take a look at gold and silver. First, I'm going to go to the larger chart here. This is a 6-hour chart where you can see the low from March 2021 as a primary wave 4. Off of that, we're counting 1, 2, 3, a deep 4th wave, and looking for an ABC move up for a 5th wave towards the 2200 region. Yeah, Andy, we can talk about TLT after we look at the metals and GDX. So off of this low, the May low, we have a good constructive start inside the A wave of the 5th. When I zoom in here, initially I was counting this as the smaller degree A and a B, and then looking for that to complete the circle A of this A wave. At this point, because we have this 1-2 start, we might just see this move, this parentheses C, stretch up a little bit higher towards the 2000 region, and that might just be all of the A wave instead of getting another B wave and a C wave up towards the 2038 level, that we might just stretch a little bit further here towards 2000. So we'll look at the subwaves as it goes. So far, this is looking like it's an ending diagonal for this C wave up with a only ABC move up for wave 1. So we're looking for an ABC up for the 3rd, and then a deeper 4th, and an ABC up for wave 5. But that could still stretch out a little bit more or get some extension at the end to get it closer to that 2000 region. If we do end up holding around 1920s to 1930s, then we probably will just move this a little bit further out in time and look for that B wave and C wave up for more of the A wave. Looking at silver, silver not really counting anything as a larger degree because I don't see anything as a larger degree the most reliable. But off of the May low, we have an ambiguous looking move that's not clearly 5 up, but not clearly an ABC either. But we have a retrace down to a 764 retrace. And then we have a pretty bullish looking move off of that and a clearly corrective retrace holding a higher low here. So this is a bullish setup off of the June low, and ideally now holding the 2119 level for what can at least be a measured move targeting the 23s, but I think we should get more of this, at least an ABC up closer to the 24 region as a C wave or a 3rd, based on this as either the AB of an A wave of the 3rd or maybe a 1-2 start to this 3rd as an impulse. Now, I'm going to start with looking at GDXJ because GDXJ made a lower low here in May for its parentheses B wave, and that's a very long, drawn-out corrective retrace off of the August 2020 high down to a 50% fib retrace level, and so far it is trying to still hold that May low. It's a very, very deep retrace, but it does look like a potential 5 waves up and a corrective retrace holding a nominally higher low for now. And that could be a 1-2 start to wave 1 of the larger C wave up. Now, GDX, on the other hand, already broke that May low. But it did not, the May low in GDX was not actually a lower low for the alt B wave from the low that it struck back here in October. So technically, it already has a 1-2 in place that is still valid, although that was really called into question with the nominally lower low here. I'm not sure if this is something we should kind of just discount because of the very overweighting that GDX has, where GDXJ is a little bit more equal weight from some of its components, being the smaller cap index. But nothing very clearly bullish at the immediate time frames in GDX, and GDXJ is also a little bit questionable. At the larger degree, we're still looking for it to hold this 28 to 27 support region as the A and B wave in this larger primary degree wave 3. So even if it does end up dropping down in a nominal lower low and stretching down towards the 27s, that will still look like the B wave and a bunch of corrective GORP in here, setting up for a move higher eventually. All right, now before I look at TLT, I want to look at US. US is the 30-year Treasury price index, and there is a huge risk that a very, very long-term diagonal topped at the extreme spike high that we saw in March of 2020. We were following this as a corrective decline here and looking for this to give us 5 waves up off the low. It didn't give us a clean 5 waves up off the low. It failed to hold support as a fourth. Then we were considering maybe this was a 1-2 of a bigger leading diagonal. That started to get a nice move off of that low, but then it broke that support and then proceeded to drift a lot lower. I don't really like this as the 5-wave move down. I think if this is this larger fourth, I'm going to shift and count this as a WXY. And instead of a red, because the red 5th wave really stretched well beyond normal extension for a 5th into what looks more like an ABC down itself. Now that ABC, though, can be more bearish as the start of a bigger decline. So, you know, the nice thing here is that if we are looking for a 5th wave up in an alt 5th wave up in this larger diagonal, that it should be an ABC move, and the ABC that we expect for the A wave could just be part of that corrective bounce, setting up a much more bearish move. So even in the more bearish count, we have overlap with what we would expect for a move coming up to new highs. So we should hopefully be holding this low here and starting an ABC move up. Now, when we look at the smaller time frame on TY in particular, we can get another 4th and a 5th wave down, whether this is an A, B, and a C wave. Even if this is a C wave, it could get another 4th and a 5th lower. But especially if this is a C wave instead of a WXY, then we can get another 4th and a 5th wave lower from there. So this might get less of a corrective bounce than the red ABC up to about here that we were looking at on the 30-year chart. This is the 10-year. So with that in mind, you know, we can look at the TLT. The thing that I do like to point out to people, there we go. TLT only started back here in 2004. So off of that all-time low, we can count 5 waves up, but that's not a completely complete chart, because when we go back and we look at the US chart for long-term bonds, we can see that the low for TLT came pretty much right in the middle of this C wave of the 3rd in the way that we're counting that. So TLT has this 1, 2, 3, 4, 5 waves up, and then a possible, or 5 waves up into here, and then this possible corrective retrace. But I would be very careful trying to rely on TLT chart by itself and not looking at the potential for the more bearish counts that the actual Treasury bond index chart or Treasury bond prices can be communicating to us. At this point, this might just be an extension of the 3 here and looking for a new ABC up. But this matches that yellow count that we were looking at on the 10-year bond. If this is all of a consolidation, then this can be that Y wave that we're looking at on the 30-year. Cali, again, SMH is one of those indexes that we will cover in the Stockwaves webinar, but that's not part of our normal coverage here. Andy, I don't think there was not 5 waves up at a larger degree on the S&P. I think the most notable, the bigger breakdown came when we were looking at here. Let's zoom in. So off of the February low, and then holding the higher low in the S&P, we were counting this. This looked like 5 waves up. We had a corrective retrace to a higher low. So we're counting this as a wave 1 and a wave 2. Then we had 5 waves up here for a possible third. And we needed to see this hold a fourth and then get a 5th wave up. So it got a corrective retrace down into the higher region of support for a 4th wave. It tried to turn up, but it couldn't get a clean 5 waves up off of that low and failed to hold it. And so this could be a deeper 4th wave, maybe of a leading diagonal, even though it didn't overlap. But then from that April 7th low, we couldn't get a new 5 waves up there to hold as the 4th. So that was really our ideal spot where we had a 1, 2, 3, and we needed the 4th and the 5th wave up and then to hold a wave 2 to confirm a bottom. And we couldn't hold as a 4th wave to get 5 waves up. So we might look, and that's one of the things with Elliott wave is we're looking at lots and lots of different time frames. And we're trying to look at the small degrees to give us those subwaves that turn into the larger degrees, and looking for confirmation at a lot of different levels. So inside here, there's certainly has been 5 waves up off of a low at different degrees, but it hasn't grown into something that has held 5 waves up and 3 waves as a retrace. So remember, 5 waves up is not in and of itself confirmation of a significant trend change. That's only the first half. And I like to reference that Seinfeld episode where he talks about holding the reservation, that it's not just taking the reservation. That's 5 waves up. Anybody can get 5 waves up. Anybody can take a reservation, but you have to hold on to the reservation and get that 3-wave retrace that holds into fib support and then turns back up from there as the start of a larger 1, 2 as we're looking at. So that is what we're looking at confirming here at the smaller degree. We need to see that blue count fill out to give us 5 waves up for this wave 1. We need to hold the corrective retrace as the wave 2. So if you see 5 waves up, that's the end of a small pattern. That's a good opportunity to trim some and then lighten up and look for that corrective retrace to hold before adding back anything that you've trimmed. And that still is just looking at the small 1, 2 inside, which should be 1, 2 of our larger 5th wave. Real confirmation of our 5th wave at this point doesn't come until we get this 5 waves up and a 3-wave retrace. I'm not planning on being 100% exposed to equities until not just here, but until we get a 1, 2 start off of this wave 2. So I may have plenty of scalps, but I'm going to be and end up having effective exposure in the market, but it's not going to be, it's going to be with much tighter stops, until we get more of this confirmation at this point. And then certainly looking at each chart on its own and being mindful of overall risk exposure and what that stop level means in terms of the amount of capital that's at risk. Rookie, that is what we were looking at. On oil, we are certainly at risk of a larger top there. But it is technically holding the recent low is a fib support level for a B wave to try and get one more high. All right, let's look at the dollar. Looking at the dollar, we can have this ABC up, potentially completing the primary wave 5 of a cycle degree C wave for more significant potential top, but we've managed to get another nominal higher high from there. We keep getting these sharp turn downs, but nothing seems to develop into any kind of clear downside setup since we got higher than the ideal corrective bounce from this initial move down here. Followed that down nicely. That gave us a nice 5 waves down. That turned out to be the B wave of a bigger primary wave 5. But we knew that when it didn't hold in the 94 region as an A, B, C corrective bounce. What else am I missing that we usually cover? Are there any other basic Elliott wave questions or things that we can answer, or we just end up done a little bit early? All right. Well, I will go ahead and get this uploaded for you guys, and I will see you see you in the room, and then see you at the next Beginner Circle webinar in a few weeks. Take care. Have a good night.